welcome back to Block TV, where it is time for Cryptonomics. The U.S. Federal Reserve Chief Jerome Powell took to the stage on Wednesday this week and announced that he would cut interest rates by a 1/4 percentage point for the second time since July, as concerns grow about a potential global slowdown. Now, the move, which was largely unexpected, may have had an immediate bearish effect on the price of Bitcoin, which fell by $300 in the past few hours at the time of the taping of this show, equaling roughly 3.5% on the day. But is it really all connected? To break it down, I'm joined in studio, luckily for me, by Block TV's senior correspondent, Asher Westrop Evans. Asher, hello to you.
Yeah, my pleasure.
Before we delve into this is, of course, Fed Chief Powell yesterday arguing the second interest rate cut within several months.
My colleagues at the Federal Reserve and I are dedicated to serving the American people. We do this by steadfastly pursuing the goals Congress has given us: maximum employment and stable prices. We are committed to making the best decisions we can based on facts and objective analysis. Today, we decided to lower interest rates. As I will explain shortly, we took this step to help keep the U.S. economy strong in the face of some notable developments and to provide insurance against ongoing risks. The U.S. economy has continued to perform well. We are into the 11th year of this economic expansion, and the baseline outlook remains favorable. The economy grew at a 2.5% pace in the first half of the year. Household spending, supported by a strong job market, rising incomes, and solid consumer confidence, has been the key driver of growth. In contrast, business investment and exports have weakened amid falling manufacturing output. The main reasons appear to be slower growth abroad and trade policy developments, two sources of uncertainty that we've been monitoring all year. Since the middle of last year, the global growth outlook has weakened, notably in Europe and China. Additionally, a number of geopolitical risks, including Brexit, remain unresolved. Trade policy tensions have waxed and waned, and elevated uncertainty is weighing on U.S. investment and exports. Our business contacts around the country have been telling us that uncertainty about trade policy has discouraged them from investing in their businesses. Business fixed investment posted a modest decline in the second quarter, and recent indicators point to continued softness. Even so, with household spending remaining on a solid footing and with supportive financial conditions, we expect the economy to continue to expand at a moderate rate.
With me in studio, Asher Westrop Evans. Okay, let's start with the arguments the Fed gave. Why, once again, in such a short time?
Look, I mean, it's, as Powell pointed out just there is just so much uncertainty around in the market, and uncertainty is not good for business. You know, businesses are not investing at the moment. They're not willing to go out and sort of make those bigger, riskier, speculative investments they have done over the last 10 years. And it's a sign that perhaps if the Reserve Bank can cut interest rates, then the cost of borrowing is lower, there's less risk involved, and maybe they'll take those steps that they otherwise wouldn't.
Almost like an insurance policy.
Exactly, yeah, making it that little bit more comfortable, that little bit easier for guys to go out and take some investments. But this is affecting the entire business market. And although he said at the consumer level, people are still very confident, people are still in the United States still spending a lot of money,
sure,
at that investment level, at that industry level, at the sort of manufacturing level, particularly with all the impacts, most notably of the trade war, but of a myriad of different factors, people are stressed. But there's an even bigger concern going on here, which has led the Reserve Bank to take some pretty interesting policies. So over the last few days, they've been enacting what are called overnight repurchase operations, which effectively means that, so a key point to understand about the way the US banking system works, overnight, the banks settle all the debts they have with each other, right? And to do that, they need a lot of liquid cash. They just need a lot of money to settle all the debts over the day of purchases that were spent. You know, when you make a transfer,
to complete the 24 hours, so
exactly. When you make a transfer from one bank to your friend's bank or whatever, to your employer to you, that needs to be settled at the end of the day between the banks, and they need a lot of liquid cash to do that. They don't have it. And now that in and of itself is not that scary an issue. What happens is the Reserve Bank temporarily buys securities from the Wall Street dealers in order to inject cash into the market.
Infuses the market with cash.
$75 billion they've been doing at this time, a significant sum, but not industry destroying. And then the idea is that once that's all settled, the banks pay it back and it's just a temporary thing. But when this starts happening night after night after night, it indicates that there is a lack of liquidity in the markets. And that is what preceded the recession back in 2008 on a much larger scale. This is not comparable.
Not
at this
comparing
stage.
it, no, definitely, as you kept rightfully mentioning, on a much larger scale. But this has been
Consistently over a longer time. No, please.
No, and asking how, when you say that right now it's happening over, it's over and over.
So
how many
now
times have
this
they
will be
done it now?
so twice already, and now they proposed a third overnight repurchase operation, and it's just considered by some to be the canary in the coal mine. The fact that banks don't have the liquid cash on hand, something that, if we all recall, the Dodd-Frank Act that was passed by the Obama administration in the wake of the financial crisis was supposed to stop and has since been rolled back by Congress in the Trump administration.
Yep.
It was supposed to stop this issue from occurring by forcing banks to have the necessary amount of liquidity. It's concerning for those in the equity markets, but perhaps a boon for those in the crypto markets.
Entirely. But speaking about, as you rightfully mentioned, President Trump, clearly he had something to say / tweet immediately after Powell came out with the statement. Powell and the Federal Reserve fail again. No guts, no sense, no vision. A terrible communicator.
There's something
please.
I want to address with that, because I mean, Trump may have been focusing particularly on the fact that the Federal Reserve came out, they have cut rates, but they left the door open to what they're going to do for the rest of the year. And again, that degree of uncertainty spooks markets terribly. And we saw the Dow fall about 200 points in the immediate aftermath. It recovered, but still, not laying out a clear plan for the rest of the year indicates to investors the Federal Reserve doesn't know what's going to happen. And again, uncertainty is just bad for business.
Uncertainty bad for business, if anything, if anything is a true thing in this parameter. But things we're still wondering about, needless to say, also people in the sphere took to Twitter, such as the pump, seeming quite optimistic. Bitcoin, rocket fuel, combination of ingredients, usually interest rate cuts and printing money. That leads to Bitcoin's continued price appreciation, with that little emoji at the end. Now, let me ask you this. Clearly, at the time of taping this, you and I are sitting here, Bitcoin, this is very, very short term.
Right.
Ain't doing so well.
Yeah, it's dipped, which is fascinating. I mean, really, I don't know what that indicates. I don't know if it really plays into that uncorrelated asset argument. Bitcoin's just doing whatever it's going to do, regardless of what markets are doing.
That puts the V in volatility.
Exactly.
Yeah, okay.
Or it's a reaction to the fact that reserve rates were cut, which fundamentally is the fact of the matter, which tends to get people away from the safe haven assets because it comes cheaper and less risky to work with dollars. So maybe people are pulling out of safe havens and going back into dollars. Or maybe it is still a risk-on investment considered by a lot of institutions, and they're afraid, so they're pulling back. There's so many narratives at play here, and that's just talking about the US, by the way. Yeah,
right.
We can bring the Chinese into this argument. We can bring Europe into the argument and say when the places that they're at, what they're doing. There's so many narratives at play, but it is fascinating to see, given how the crypto markets are responding. I mean, we saw that surge in alts yesterday, so there's clearly some speculative interest.
Exactly. Everybody's like, alt season is back.
Exactly. And Bitcoin still, it's lost a considerable, about 3 or 4% of its market dominance over just the last few days. So there is money moving.
Yes.
People haven't locked in and closed down. There is money moving around, but again, the fact that it's dropped over the last 24 hours, maybe that's just a short-term indicator.
Exactly. Maybe the rocket fuel is an indication towards
it takes
something.
a while to light up. Who knows?
Who knows? But point being, it's not necessarily what some of the leaders in the sphere think that the Fed's action will immediately in turn show a spike in Bitcoin.
Exactly.
I think
Hasn't
we've
it been
proven
for
that. Exactly. Asher Westrop Evans, thank you for shedding so much light on this issue. As we said, cryptonomics with that rate cut by the Fed yet again. And we, of course, are BLOCKTV. We'll be right back.
For more news and updates, follow us on Twitter.